Hi everyone, welcome to our web class on ERC. I'm Drew Schildwachter from the operations team at ConnectPay. We process payroll exclusively for small businesses. And I'm really excited to be speaking with you today because ERC can put a lot of money back in your business. But you need to know how to claim it correctly first. To date, we've walked over 400 clients, small business owners like you, through ERC and helped them secure tens of millions of dollars back from the IRS. Look, we all know the past 2 years have been overwhelmingly hard for small business owners. After 2 years of COVID, folks are exhausted. And while ERC was created to provide relief, it's also confusing and time-consuming. With 100-page IRS notices and countless updates from the SBA, the amount of information out there feels endless. But ERC can also provide a lot of much-needed relief, and I know that everyone in this class deserves to get the most money possible from their credit. So with that all said, let me tell you what's going to occur and what we're going to cover today. First, I'll go step by step through eligibility requirements for both 2020 and 2021. I'll teach you how to look at your gross receipts to determine which quarters you're eligible for. Next, I'll cover wages and how ERC works with PPP loan forgiveness and other relief credits. Then I'll show you how to calculate your exact credit by quarter. And then lastly, show you how to apply using the 941X amended return to obtain your ERC credit. We also have an ERC worksheet that you can download, so make sure to grab it. It'll be helpful when it comes time to understand your eligibility and prepare you to calculate your credit. Before we jump into eligibility, it might be helpful if I define exactly what ERC is. ERC or ERTC, the Employee Retention Tax Credit, was introduced as part of the CARES Act. It's a refundable tax credit that reimburses employers for certain employment taxes due to COVID-related hardships. And since it was passed, it's been amended numerous times. Now, it's important to understand there are two main versions of ERC, one for 2020 and one for 2021. The 2020 credit is for eligible employers with 100 employees or less. And the 2021 credit is for employers with 500 employees or less. Now, there are opportunities for folks with more employees, but that was only for employees that didn't work, that were paid to not work. So to know if you qualify for either credit, there are important steps every business owner needs to take. You'll need to document your full or partial suspension by government order. You'll need to examine your gross receipts to understand your material impact and determine which quarters you're eligible for. You'll need to isolate your PPP and other relief credits to calculate your total credit amount, and then work with your payroll provider or CPA to submit your 941X. It may sound like a lot, but don't worry. I'll show you how to do it all. And if you're a ConnectPay customer, we're filing the 941 credits for any client that needs it. So you can reach out to me directly after this class if you want help. If you're not a ConnectPay customer, I recommend working with your payroll provider or CPA that has access to your payroll history. Of course, I'm always available for questions or additional help, no matter if you're on our service or not. All right, so let's focus on ERC 2020 first. The 2020 credit reimburses employers 50% of the first $10,000 worth of qualified wages paid to each employee, beginning March 13th, 2020, and extending all the way to December 31st, 2020, with a maximum credit amount of $5,000 per employee for the year. Now, there are two ways to qualify for ERC. First, employers are eligible for the credit if they paid qualified wages between March 13th and December 31st of 2020, and their business was shut down fully or partially due to government order. Now keep in mind that you're only qualified for the time which your business was actually shut down, and only if you continue to pay your employees their standard wages. I didn't typically see this for many small business owners qualifying for ERC exclusively in that way. So gross receipts are usually more important. The other way to qualify for ERC is if you paid these same qualified wages between March 13th in 2020 and December 31st, and if your business suffered at least a 50% decline in gross receipts as compared to the same quarter in 2019. Once eligible, ERC is available for each following quarter until your gross receipts have recovered to 80% or more of what they were in the same quarter in 2019. So here's an important question. What are gross receipts? Well, for most companies, gross receipts include your total sales, net of any returns, and any amounts you receive for services. But they also include income from investments, any incidental outside sources like interest and dividends, rents, royalties, or annuities. But remember that PPP loans are not part of your gross receipts. So first, you'll need to understand how to calculate your gross receipts. For most businesses that, in our experience, use QuickBooks, and here's the easiest way if you do. So what you want to do is open up QuickBooks. On the top, go to Reports, and then that drop-down is going to have Company and Financial. So from Company and Financial, you'll see a Profit and Loss Standard report, and simply go in and set the dates. January 1st, 2019, go to March 31st, 2019, and hit Refresh. And what will appear is a profit and loss statement for that first quarter in 2019. And at the top, you'll see your total income. So what you want to do is document that number, that's the dollar amount, and then repeat it for the next quarter and go all the way through 2019, all the way through 2020, quarter by quarter, and 2021. And that's where our ERC Excel workbook comes into handy. You can simply key those numbers right into tab 1 and tab 2. Tab 1's for 2020, tab 2's for 2021, and it'll calculate your gross receipts for each quarter and show you the decrease, the amount that you are off. So once you've done that, let's take a look at an example on the screen. So remember, to qualify in 2020, you'll need to have experienced a 50% decline in gross receipts for a quarter compared to the same quarter in the look-back period. So once you qualify, that credit will continue through to the following quarters until your gross receipts are back up to 80%. So in this example, this business experienced over a 60% decline in gross receipts in their second quarter of 2020. So they qualify for ERC during that quarter. And since the credit carries over until their gross receipts are back up 80% or more, they also qualify for ERC throughout quarter 3. However, by the end of the third quarter, the business here, exampled, recovered their gross receipts and were only down 17%. So the credit would not carry over to Q4. Now in the next slide, in this example, I have the same business, but this business, again, would qualify in quarter 2 because their gross receipts were down in excess of 50. And then the credit automatically carries over to Q3. However, unlike the last example, they did not recover 80% of their business. So they're not considered fully recovered in Q3. And their gross receipts did not get above 80%. So the credit would carry over to Q4 as well. Now let's take a look at the 2021 credit, because there is a whole different set of eligibility requirements. The good thing is 2021 credit is both easier to qualify for and offers more relief than the 2020 version. For most businesses, ERC in 2021 covers the first 3 quarters of the year, from January 1st, quarter by quarter, ending September 30th, 2021. The credit reimburses up to 70% of the first $10,000 in wages, of qualified wages, for each employee for each quarter. That means you could potentially receive $7,000 per employee for all 3 quarters, which is a total of $21,000 per employee. What's more, to meet the qualification requirements, your business only needs to prove a 20% or more decline in gross receipts when compared with the same quarter in 2021, respective to the 2019. It's important to note here, though, there's also no carryover rule like 2020. You have to qualify quarter by quarter in 2021. So here's an example of a business qualifying for ERC in 2021. This business would qualify for the credit in quarter 2 because they experienced more than a 20% decline in gross receipts as compared to 2019. However, since there's no carryover like 2020, this is the only quarter this business would qualify for. Now, there are also alternative look-back periods for businesses that were not in operation for all of 2019. These include comparing Q4 2020 to Q1 2021 to determine the 20% or greater decline in gross receipts. Now, if you're a recovery startup business, which means you started your business after February 15th, 2020, the rules for ERC 2021 are slightly different. For a recovery startup business, you're actually eligible for ERC during the last quarter of 2021. Of course, you can't compare your gross receipts to 2019 because you weren't in business. So as long as you opened your doors on or after February 15th, 2020, and your gross receipts are less than $1 million, and you have at least one employee that doesn't have at least 50% ownership, you would automatically receive ERC for the last quarter, again at a rate of $7,000 per employee, or 70% of wages up to $10,000. All right, before we move on, let's recap what we just learned about ERC 2020 and 2021. ERC 2020 is available for employers with 100 employees or less, covers wages March 13th through December 31st, 2020, and the total credit you could receive is $5,000 per employee. To qualify, your business had to be shut down by government order, or you need a 50% decline in gross receipts when compared to the same quarter in 2019. You would continue to qualify until your gross receipts recovered 80%. On the other hand, ERC 2021 is available for employers with 500 employees or less and covers the first 3 quarters of 2021, from January 1st through September 20th, 2021. You could potentially receive $7,000 in credit per employee per quarter, or a total of $21,000. To qualify, your business only needs to prove a 20% or more decline in gross receipts when comparing 2021 to the respective quarter in 2019. This is on a per quarter basis and does not carry over. I'm assuming that this ERC class is for small employers because that's who we serve in the payroll world. If you have over 100 employees in 2020 or 500 employees in 2021, there are credit opportunities for employees that were paid not to come to work. And if you need more information on this, make sure to contact your CPA or tax advisor. You can also check the IRS website. Now that you know how to determine whether you qualify, you need to understand how to calculate the total credit you'll receive. To calculate your credit, you'll have to determine your qualified wages, and this is where your payroll records come into play. Qualified wages are any W-2 wages paid to employees during your period of gross receipts decline. And this also includes employer-paid health plan costs. Again, up to $10,000 per employee. So some employees are not eligible for the credit, and these include those with 50% ownership that had family members working in the business. It's also important to note that although ERC can be claimed in conjunction with the Payroll Protection Program loans or other credit reliefs, you cannot double dip and claim both credits on the same employee wages. There are other relief credits that you can't double dip, which includes FFCRA, which is the Family First Coronavirus Response Act. These were wages paid to employees during COVID early in 2020 for folks that couldn't come to work. You could get a credit for up to 80 hours. Then there's also the Restaurant Revitalization Fund, those exclusively extra credits that were given to the restaurant industry, and also to WOTC, the Work Opportunity Tax Credits for folks that hire in empowerment zones or have folks coming off of unemployment and veterans. So this is where it can get complicated because you've got all those potential credits and you need to understand how you use them with your payroll company. And that's where our ERC worksheet comes into play. So in this slide, the first step you'll want to do if you're going to calculate these on your own is to list the employees down the left side, and then across the top you'll want to put each pay period by quarter and list those out. In the next slide, you'll see we've gone and populated the wage information. So most payroll providers can create this report. Here at Connect Pay, we can produce that report with your FFCRA wages backed out, which is helpful. Then I move to the third slide here. And this is where I take the PPP information from the first slide. I brought it over to the bottom center. And then what I've done is I've used the color blue to denote and block out the PPP information. And what you'll see is, in this case, the owner, Adam Owner, he is not eligible for ERC, so I've used his exclusively for PPP. And also because Kelly Admin is his sister-in-law, again, I've used their wages exclusively for PPP. With respect to the owner, because he had a 24-week covered period, you can see that I've limited the PPP to $20,833. So that was the limit of owners, what they can use to document the PPP. And at the bottom, I've summed up the $47,250. And I've used that spreadsheet to denote, and that matches the forgiveness amount brought from the other page. So through this, I know that the owners that aren't eligible for ERC, I use them for PPP to their max. And then I soaked up all the other wages for the employees to document that I've used all of the PPP wages. Now that sets me up for the fourth and final slide. So you can see here in yellow, now I've gone back and I've used the color yellow to document the wages that are free and available for the ERTC credit. You can also see here that certain employees have more than $10,000 in wages, but I've limited to it. So the maximum amount of wages in this calendar year for ERC 2020 is $10,000. And then the credits, you can see that I broke a credit for Q2 and Q3. These are separate because they need to each go on their own 941X to be filed by paper with the IRS to obtain the credit. In addition, I've left the wages starting after March 13th on this particular form because in this case, if this business was closed by government order on March 13th, and the owner continued to pay the employees, then those pay periods could make up that difference to get to the $10,000. So you can see there's a lot going on this form, but I wanted to demonstrate the process. So once you've established your credit and it's documented, it's time to claim the credit. So there's no application specific for this. Instead, employers will need to claim their credit using an adjusted quarterly payroll tax return form called 941X. Now, typically, payroll providers like us, we file your 941s each quarter. So this 941 is amending that quarter. So once you provide your payroll information and you can document your credit, then your payroll provider can complete the 941X. And the IRS allows normally up to 3 years to amend a 941X. I've heard that they've extended that to 5, but I haven't been able to find it in the documentation. But this is a good year to go ahead and get your credit. So what you'll want to do is file your ERC credit on the 941X. Here at ConnectPay, we're filing these 941X for our clients that have been on our service during the affected quarters. So if you're not a ConnectPay client, we encourage you to reach out to your current payroll provider or CPA for help. If you don't have anyone that can assist you there, you can still reach out to us. There are firms that are offering to do this credit. Here at ConnectPay, we're charging $250 per quarter for the 941X. And then after you file, you'll want to share a copy of this 941X with your tax preparer. And then the last thing you do is wait, because these are all mailed into the IRS. Currently, they're running at about 6 months. So they process these forms and they're going to send checks via the United States Postal Service to the address that's listed on your 940. So it could take up to 6 months to receive the check, so don't expect it right away. And then make sure after everything is said and done, and this is really important, that you maintain all of your records regarding this ERC for at least 4 years. Now, what you'll want to do is include any copies of full or partial suspension orders from the government. You'll want your records, any financial statements that demonstrate the decline in gross receipts for the quarters that ERC was claimed. You'll want your payroll records for the quarters impacted. So you'll want your wage summary and your payroll details. And then most importantly, your loan documentation. You'll want PPP-1, PPP-2, including your forgiveness amounts, your covered periods, and then documentation of any expenses, both payroll or non-payroll, that were qualified. And lastly, if you need employer-paid health to get to that 10,000 limit, you'll want to have receipts on that. And of course, if you got FFCRA, Restaurant Revitalization Fund, you'll want the documentation there. And that wraps up our class on ERC. I want to remind you that our ERC worksheet is available to download, so make sure to grab that to help organize your documents and eligibility for the credit amount. For ConnectPay clients, please fill out tab 1 and tab 2 of the worksheet. So that would include your gross receipts, your PPP information, and list out any owners or family members that are on payroll. When you're finished, you can send that to info@connectpayusa.com, and we can schedule a call, review your information, and get started on processing your 941X. Thank you.